Welcome to Objective 3 of Unit 7 of Accounting 3310. In this objective, we'll look at the statement of shareholders' equity. Most public companies provide a statement of shareholders' equity that explains the change in every shareholders' equity account, rather than just the statement of retained earnings. This highlights stock issuances and buybacks, as well as dividends paid. How does the statement of shareholders' equity organize information about owners' wealth? At the end of this objective, students will be able to use a statement of shareholders' equity. The purpose of the statement of shareholders' equity is to provide a summary of the changes of each shareholders' equity account: common stock, retained earnings, accumulated other comprehensive income, and treasury stock. This summary includes a reconciliation of the beginning and ending balances. It articulates with net income and with comprehensive income, and it highlights dividend payments and changes in shares not visible in other statements. Here's the general format. Each account is a column in the statement of shareholders' equity, and the rows represent the business events that impact them. As we look at it here, we start with a beginning balance in common stock, retained earnings, accumulated other comprehensive income, and treasury stock. Net income affects retained earnings, and so that is always present in the statement of shareholders' equity. Other comprehensive income are the changes that show up in the statement of comprehensive income that are close to accumulated other comprehensive income. Dividends are a reduction in retained earnings, and they'll show up. If there are additional issuances of shares, those will be listed to show the change in common stock. And if we have shares repurchased, those would show up as changes in treasury stock. Notice that each column then is summed so that we can see the reconciliation between beginning balance and ending balance. This is the end of our discussion of the statement of shareholders' equity.